Ron, I appreciate your kind words earlier. And ladies and gentlemen, it's my privilege to be here this morning to talk with you about a very important thing, and that is the purchase of a home for the first time. And I think it's a great thing that you're doing. I've been in my business for a long time, probably, let's see, 1933, I think. Not really. It was 1981. And when I started in my business, and some of you may remember this, um, interest rates were 20%. The economy was not good at all. But now interest rates are only 4%. And even though rates are rising, as Ron mentioned, they're really very good. And I think it's a good thing that you're doing right now. And one of the main things that Citadel will look at is your credit report. And it's very important that you are aware of what is in your credit report. And I assume that most of you have seen your credit reports. If you haven't, you should go to the website annualcreditreport.com, and that's annualcreditreport.com. That will link you to all three of the bureaus, Experian, TransUnion, and Equifax. And it will allow you to, once given the proper verifications and credentialing, to see what's on your credit report and dispute anything that's on your credit report. And once you register on the website, you'll be able to talk with a live person at the credit bureaus to answer any questions that you might have. If you call the 800 number, nobody's going to answer the phone. But once you get into the website, you'll be able to effectively see what's on your credit report and talk with someone. And on your credit reports, you'll see the name of the creditor, the status of the credit of the creditor, whether the account is in good standing, current, paid as agreed, 30, 60, 90, or more delinquent, as well as judgments and collection accounts and medical collection accounts and so on down the line, and inquiries. If you apply for a loan somewhere and an inquiry is lodged, that will appear on your credit report as well. A couple of things. It's important that you keep your credit in good standing. Everyone knows that, because what affects the credit report and the credit score most is derogatory credit, especially if it's currently derogatory, and liens and judgments and so on down the line. But if someone has a problem on their credit report, it's not the end of the world. If you cure that problem, going forward, the credit score will begin to rise in a very short period of time, usually 30 to 60 days. When I say credit score, you'll see on your credit report a FICO score. FICO means Fair Isaac. That is the company that invented the credit score probably 60 years ago. And for a long time, it wasn't used for mortgage purposes, but over the last 25 years, it has migrated into our world, the mortgage world. FICO scores can range from 350 to 800. The higher the score, the better the risk. This is not to be confused with the Vantage score. The Vantage score was invented by the bureaus a few years ago, and that range is 500 to 900. So when you go on to annualcreditreport.com, you're getting the FICO score. You're getting the score that Citadel is reviewing to approve you, or not. If you go on to myfico.com, you're getting the Vantage score, and that ranges from 500 to 900. Again, same principle. The higher the score, the better the risk. But the scale is different, and so the scores will be different. Please advance, Ron. Thank you. And we can advance further. We talked about that already. Good. So the FICO score breaks down this way. As you can see, types of credit in use, 10%. New credit, 10%. Length of credit history is 15%. Payment history is 35%. And the amounts owed, 30%. Now, you may have a pristine credit report with no delinquency. But if you're utilizing or overutilizing your credit cards, then that can have a negative impact. If you're riding or exceeding your credit cards, then that can have a negative impact. So the reason for that is because um, the past predicts the future. And in many cases, if someone is writing or exceeding their lines of credit, it predicts poorly for the future. It could lead to bankruptcy and that type of thing. You can advance further. Any questions so far?
Lisa, if there are no questions, I actually have a question.
Sure.
Go ahead.
John, maybe you could touch upon this. Is it better to pay your credit cards down and leave that account open versus paying them down and closing out that credit card?
That's an excellent question, Ron. It is better to pay them down, ideally to 30% of utilization, and do not close them. It can have a negative impact if you close them because a credit score is all about history. And as I said, history predicts the future in terms of the credit report and everything else. So the answer to that is no, leave your credit cards open. But the important thing is to continue to utilize revolving credit, because if you don't, the credit score will disappear. And that's not a good thing either. You need to have a credit score really to obtain a loan these days. You need a good credit report to obtain even a job and insurance. And the credit score, as you said at the outset, Ron, can determine in terms of loans your rate, and that's very, very important. So a couple of questions that I typically get on situations like this, presentations, is how long does a credit report last? Well, it can credit accounts without delinquencies can remain on a credit report indefinitely. And let me step back for a moment. It's important to uh, maintain at least 3 to 4 proving accounts to maintain a credit score. And what do I mean by proving accounts? I mean accounts that are in constant use. And again, keep the utilization down below 30% ideally. Credit accounts with delinquencies will stay on the credit report for 7 years from the date of the first delinquency. Collection accounts, 7 years from the date of the first delinquency. Public records, 7 years as a rule. Chapter 7 bankruptcy is 10 years. Bankruptcy Chapter 13 is 10 years from the date filed. And inquiries will remain for mortgage purposes. The mortgage company, Citadel, is only interested in inquiries that have happened over the last, I would say, 60 days. Is that right, Lisa?
Yes.
Okay, good. Any questions so far?
John, I had one other question.
Yes.
So with the commercials that are on presently about boosting your credit score, what's your opinion about that?
Actually, it works. Experian has come up with a product called Boost, and that is consumer driven. So you as consumers, we're all consumers after all, can go onto the Experian website, register on Boost, and add things like utility payments, rental payments, and so on. And that will have a positive impact on your credit score. And so it does work. It's proven. It's a fairly new service. Pardon me, about a year or so it's been in existence, but it does work. Now,
That is good to know, because sometimes first-time home buyers might not have a lot of credit, so that's a way to add other payments that they've made, promptly.
It is absolutely. So I would recommend it. And you can get more information about Boost by going onto the Experian website, Experian.com. It is an Experian product.
So I imagine, John, since Experian has it, the other two repositories will probably shortly follow suit.
I would agree with you, Ron, although they don't have anything like it yet. Experian is usually the trailblazer in terms of credit bureaus, and in this case, they have been again in the creation of the Boost product. It's opening up loan opportunities for over 40 million people who would not otherwise have that kind of an opportunity.
Wow.
There are folks, and I respect this, who do not believe in having credit cards and having debt. Neither do I. Unfortunately, I don't. But again, for score purposes, it's important to maintain 3 to 4 proving accounts, revolving credit cards, and keep them in constant use, or the score will go away. We don't want that to happen. Go to the Wawa, buy a shorty, buy gas, and then pay it down when the bill comes in, that type of thing.